Good evening, friends. I am KK Gupta, your host. On behalf of the Association of the Financial Advisor of India, I extend heartiest welcome to our eminent panelists, Shri Samresh, Shri Puneet Sehgal, Mr. Naveen Kumar, Ankur, and Mr. Naveen Jain. And my dear friends, under the series of associations, we have completed 16 webinars. And for the research in India, so we have done 119 webinar under the series. We have discussed different subjects. Either you talk about the restructuring of the accounts, emergency line of credit, infrastructure. So we have discussed all aspects in respect of the banking, in respect of the entrepreneurships. And there is overwhelming response from our members, from the bankers, and other friends. Today webinar, I think there is an overwhelming response from the participants. More than 700 registrations. We got it. Besides, represented under the YouTube, Facebook, and other social medias. Today's subject, friends, are of a vital importance. We are talking about the digitalizations of supply chain financing. You are aware that SMEs are playing very important roles. When we are seeing the registration under the Udyog, we find only 66,000 registration is there, whereas the unorganized registration, unorganized figures, which we have find that 6.30 crores under the semi-sectors, about 95% represent the macro small units. So these supply chains, which we are going to discuss, will try to bridge the gap of the availability of the funds with the bankers, with the financial institutions, and which unorganized sector are not availing it. For supply chains, we're going to discuss the details with our eminent speakers, eminent panelists here. So I don't take much time. Which I'm talking about the SMA. It is estimated that 8.1 trillions in emerging market, where 40% of the funds dedicated to paying the receivable. Delay payments from the supplier side, from the buyer sides, is about 20% of the working capital. That means supply sides, if be strengthened, then inadequacy of the working capitals, which we are always pleading in all webinars, can be streamlined. So I'm not taking much time for that because we are eminent figure of the thing. eminent personality are with me. Mr. Abdullah, you are here. Mr. Abdullah, I could not see you.
Yes, I'm.
You are here. So I am just coming to you, sir.
Yes.
Mr. Abdullah is currently heading co-lending and fundraising at Credit, which is the India largest leading fintech with majority lending via banks and NBFC partnership. You are aware that co-lending, 80/20, is being financed by the bank and the NBFCs. He was previously associated with lending cards, heading cross sell, where he launched an overdraft product via co-lending association with the banks. Prior to this, he worked with the Bank Bazaar, which is master place for the credit cards, personal loan. He was also worked with the Standard Chartered Bank and Indian Oil Corporations. Mr. Abdullah, just I want to know from you. We are talking about the traditional financings, debt financing, and now we are talking about the supply chain and how you do distinguish between the two, and how you feel that supply chain can be useful for a supplier, for a vendors, because it is both ways coming. Either you talk about the vendor or you talk about the dealers. So, what is your view, sir? I hand over to you.
Sure. Thanks, Mr. Gupta, for that introduction, and thanks, Resurgent India, for organizing this webinar. I've been attending some of your webinars as a attendee, and I've been in some of your seminars as a speaker, and I think it's a great medium. And I think and you are having an impact on the various aspects of, let's say, financing. I mean, I see you in securitization, co-lending, supply chain finance, etc. So I think it's a great job that you guys are doing, and it's good to be associated with the brand, right? So starting with the supply chain finance, right? And I think I would just like to maybe explain what supply chain finance is in an extremely crude manner, right? So supply chain finance is usually relevant when a large corporate, let's say a Reliance Industries or a Tata Motors, has a lot of small suppliers who are very small and has a lot of buyers who are smaller, right? So the biggest entity, the entity who has the highest credit rating and is financially the most strong entity, is, let's say, the anchor corporate, and has hundreds and thousands of suppliers and buyers, right? And all of them are financially weaker compared to the anchor, and are have a lower credit rating, right? So their ability to raise funds from the market is lower than the anchor, right? So what they do is they rely on the trade with the anchor entity to raise funding. This is in principle what supply chain finance is, right? To give you an example, let's take Maruti Suzuki will have hundreds of suppliers, right? And let's take a small supplier called Suraj Enterprises. Now Suraj Enterprises buys products on day zero, sells it to Maruti on day 30. It takes 30 days to, let's say, it buys raw material and manufacture the goods, right? So on 30th day, it sells the product to Maruti, and Maruti will then pay Suraj Enterprises on 60 days. I'm taking an extremely simple example, right? However, so Suraj Enterprises bought the products on day zero, created the final product on day 30th, and sold it to Maruti. And on 60th day, it got the money from Maruti. However, to its own supplier, it has to pay on 30th day, right? So there is a gap of 30 days between what it has to pay, which is on day 30, versus what it will get, which is on date 60th, right? So now to bridge this gap of 30 days, right, what it does is it can show that I've sold product to, let's say, Maruti. This is my invoice. Why don't you and a lender, let's take the name of cash flow, right? Because I think Ankur is here, right? So it will go to cash flow and show the invoice to cash flow, and cash flow will through its network of banks and NBFC pay to Suraj Enterprises. And after 30 days, when Maruti actually pays, right, it will pay directly to cash flow to settle this, right? So this, in a very nutshell, is what a supply chain financing is. The only thing here happens is, let's say there is an original invoice that Suraj Enterprise raised of 100 rupees. Cash flow will pay 97 or 98 rupees to to Suraj Enterprises, and when Maruti pays 100 rupees, that 2 rupees or 3 rupees is the margin of cash flow, right? So how the vendor or the supplier of Maruti Suraj Enterprises gains here is the money that it would have gotten on 60th day, right? Today it gets it on 30th day itself. So one, it is able to pay off its pay off its supplier. It improves its cash flow. It now has that money and can invest in its own business to grow and to scale the business. How it helps Maruti is, now Maruti can negotiate higher payment terms with the supplier, because supplier is assured of immediate cash, right? So it also helps Maruti to negotiate better payment terms with its supplier. And also because Maruti can say, you are getting this financing because of me, because of my credit rating, and obviously cash flow earns, or the bank or the lenders earn, because of the margin that is there, right? So this is broadly, if I may explain, supply chain financing, right? Now, how is it different from, let's say, a traditional way the financing is done, right? So traditional way financing is more like, you go to a bank, you submit tons and hundreds of documents, right? And if you're lucky, maybe you come to cred, and without submitting documents you can get a loan, but still you submit documents, you get a loan. That loan is typically an EMI loan, and it amortizes over the life of the loan, right? So this is how a traditional financing works, right? I think the core difference between a traditional finance product and a supply chain finance product will be, a traditional finance product, it's an EMI based product spread over 3 months, 6 months, 1 year, 2 year, 5 year, 10 years, whereas supply chain finance finances your gap in the supply chain from the time you raise invoice to the time you get the payment, right? So it's a limited tenure product, but it helps you when you need it. So traditional finance, as they say, right, it is available when you don't need it, and you should take it when you don't need it, whereas supply chain finance is available to you whenever you need it, and you can only take it whenever there's a gap, right? Another advantage, so it is available when as per the need. Also, traditional finance is more like a one-time injection that you can take to grow your business, whereas a supply chain finance is a financing option available to you all the time that you can typically take. Another difference would be, supply chain financing typically is low cost. You can get it at 8%, 10% annualized rate of interest, whereas for MSME, if it goes for traditional financing and it's unsecured, right, it will, the rate of interest will range from anywhere between 15-16% to 20-25-30%, right? Also, supply chain finance, as the name suggests, is primarily for your cash flow management, for your working capital requirement. Obviously, the term loan or the traditional loan can be used for growth of your business. It can be a long-term loan that you can use to grow the business, whereas the supply chain is more for your maintenance of the business.
Okay, Mr. Abdullah, what do you feel that? What is the advantage of this, you can say, this digitalizations? Have any advantage over the previous, what bank are discounting the bills, your factorings are also available? And what do you feel, how it is different and how it is useful for the supplier, or you can say for the dealers?
Sure. So I think, see, the biggest point in supply chain financing, right, is that it's extremely time sensitive, right? You're getting a funding for 30 days or a 60 days or a 90 days, right? Now, so the most important advantage here is, you need money. There's very limited point of time that you have, to sort of access those funds, right? And hence, digitization helps, because all the records, everything is there on a platform, right? Let's take the example of Treds platform, right? So all the information, the supply chain, the invoices, etc., are there on the let's say the Treds platform, and hence the lenders, all the stakeholders can take a decision fast, and the money can come quickly to the supplier or the buyer of the large corporate, right? So it helps to reduce the TAT that is taken to provide the financing, because, and it's extremely important, because in any case it's a small time finance, right? Another example could be, let's say, the e-commerce firm, right? So today you can actually go to a Flipkart, whatever, and if, let's say, if you want to fund the seller, right, let's say I'm SBI and I want to fund the sellers of the Flipkart, right? What I can do is, whatever data I need to do my underwriting, I can take it from one place. I can go to Flipkart. Flipkart may have lakhs of sellers. I can take the data of all the sellers from Flipkart. Based on that, I can run my underwriting model, and based on that, what is the funding that I can do to various sellers. which sellers I want to fund, which sellers I don't want to fund, and what is the amount, what are the conditions, etc. Right. So again, digitization, what it helps is, once I do that, there is very limited data that I need from each of the seller to sanction their credit line, right? So what it does is it makes the life of the seller extremely easy. It has to provide very limited data. It reduces the time that is taken to take a decision. uh, uh, and the third important point is, it is available whenever the customer needs it, and the time taken to, let's say, to apply, to get approval, etc., reduces significantly. So yeah, these are the advantage of digitization of supply chain finance.
You can throw some light about the, you can say, about digitalizations in India and abroad. When we're talking about China, we are talking about the America, they are having a huge transaction for that. India is still picking up. Have you any view on that?
Sure. So I'll do that, right? And I'll not go to China. I'll not go to US, right? I think I'll go to a country in Latin America, right? Mexico, right? Way
Okay.
back in 2000, way back in 2014, Mexico, because it wanted to avoid tax evasion, they started. What they started was, your e-invoices, right, or digital invoices. They made mandatory. They made it in stages, right? Initially, it was for large corporates, and then they started reducing the relaxation, right? In 2015, what they did was they made it mandatory for everyone. So everyone had to sort of raise their invoices digitally. And what they did was they created a platform which was used to raise the invoices. All the invoices are raised in a standardized format, right? So there's one format that everyone follows to raise invoices. The issuer, right, the entity which is raising the invoice has to digitally sign the invoice. And what they also did was they had a third party entity which would verify all the invoices, right? So what it has done, it has made the entire supply chain process in Mexico extremely efficient. It has reduced tax evasion. Just to give you a number, and why I'm taking this example, right? I mean, obviously, why I'm taking this example is, uh, because we have also in India, right? We have also now, over a period of time, are making e-invoices mandatory. I think around 2 years back in 2020, we started with digital invoices mandatory for companies with turnover more than 500 crore. After a few months, it was reduced to 150. This April 2022, now all entities whose turnover is more than 20 crore have to raise digital invoices, right? And I'm sure this will reduce over a period of time. So today, raising digital invoices is also becoming mandatory, and we also have a trades platform, right? Going back to Mexico, where all of this started, let's say around 15 years before India, it started in India, right? So Mexico has a population of 12 crore, right? In that country of 12 crore, uh, some uh, some 70 crore digital invoices are raised today. I think we started with raising digital invoice a few years back. We are obviously a country of 130 crore people. I think around 60 crore or 50 crore invoices are already been raised in India today, right? So I think what we have done is, right, in making GST invoices, digital invoices mandatory, and using the Trades platform, I think can provide a lot of scope to sort of digitize the entire supply chain, and making the and I think if we can learn a few things from Mexico example, and two things that I really like about them: one, they've made the process extremely standardized. So it's an XML format in which you raise invoice, and it is standard, right? So it's easy for banks or lending institutions to evaluate. And second good thing is, there's a third party which verifies it, and it's not a government entity, it's a third party which verifies it, right? So it increases the authenticity of the invoice, right? And I think that is where we can learn a lot and work on our trade system, our e-invoice system, to scale it up and make the financing easier.
Very nice, very nicely you covered. I will come back to you. If some question will be there, or again, last your viewpoints. So now coming to Mr. Naveen Kumar Jain. He is FCA, founder and managing director of Genco Corporate Advisory. Genco is helmed by Shri Naveen Kumar Jain, who is not only FCA qualified, but also very dynamic first generation visionary enterprises come founder. With 25 year plus experience in the Indian financial and capital market, Mr. Jain founded Janko, after gaining a wealth of varied experience in the financial sector, which include handling the key merchant banking activities, one of the leading advisory firm in India. I think he's the right person when you are talking about him. So, Mr. Jan, just I want to know, there is a big gap, financing gap, when we are talking about SME sector. When this supply chain we are talking about the big buyer like a Bajaj or Maruti and Mahindra, and these people can play on that under their ancillary units. They can take the benefit for that. How the SME sector, this financing gap can be met by the supply chain.
Yeah,
Mr. Jain, please.
yes. Thank you, Mr. Gupta. And today's it's a very nice question you raised. See that in India, if we see Indian economy, that there are two kinds. Every economy has a very different kind of sector: poor, rich, educated, uneducated, sourceful. And if we see that uh, uh, this SME gap, there is a gap of around 20 to 25 lakh crore rupees in Indian SME sector of the financing. So you are just talking about the big names. You have just talked about the big name about Maruti and this say Bajaj or like that, and and this facility is not reaching to the far-ended SME sector in India. So that digitization of this SCF is facilitating them, because lots of platforms are emerging in India now, and they are having the database, and they are creating very real time they are providing very real time funding to these guys. Of course, the interest rate is varying from platform to platform, and this SME to SME. So one need to understand what kind of platforms are emerging, what type of technologies are there, and what kind of fundings are available to them. Like see that a very good this thing the person can get 8 to 10%, and the others which are there they can get around 15 to 16, or around 18 to 20% at a rate of interest. So in this technology, because of this technology platform, see the real time access of money is available to this semi sector. And as an advisor, we have to literate these guys. We have to spread the words to these our SME clients, and this thing to, to get the registered with the platforms.
Right. The major issue, Mr. Jain, because you are helm affair of the IPO issues also and merchant bankers also. This is one aspect where they can go to the capital market and raise some, you can say, capital for that. My point is supply side, which is major topic of the day. If they are NSLT of the big clients, definitely they can avail the supplier credit. Even buyer credit can also be there. Even for small unit, which are not vendor of these big companies, how they can be benefited under the supply chain system over that.
Yeah, that is what we are talking today, because you know that uh, in far deep-rooted India, and the in the rural sectors, the banking and NBFC facilities are not there, and they are really getting money from the old traditional system, like taking money from the private lenders, and they are running their business. Now, what happened that there is a technology happening, there is a reach from the digital platforms, and all kind, see, like I just give an example of TEDx. So they are having a platform in which they are registering the as much as possible all the SMEs, and they are just evaluating their data on a real time basis. So data availability, access of data, and their registration with these guys will definitely help them in getting money on a real-time basis by discounting their bills and shortening their credit periods.
Whether Mr. Jan, they cannot be, if I suppose that they are a vendor of Bajaj or you can say Maruti. And certainly I seen that another sub-vendor are there. They are manufacturing, supplying to the vendors. That vendor raising the bills. So how this sub-vendor, you can say, can be benefited for that?
Yeah. So now what happened that earlier these facilities were available to only the top class suppliers, so to the top supplier of the top class buyers only. Now what happened that in a platform that so they are aggregating and they are providing opportunity to various investors who can definitely land on customer to customer basis, and there is a risk taking according to their risk taking abilities also, and they have all the credit check system available on their these things. So it's always better to register as early as possible to the technological platforms. So I suggest all the SMEs and MSME people to register and get them evaluated with these platforms, because all the banks and majority all the fintechs and it's happening all like I just give an example that like ICICI Bank has your digital light, Bank of Baroda is also as a supply chain system. Then lots of technological platforms like Credex, DBS, Moglix, Invoice Smart, Priority Vendor. They all have emerged in system actually. So they need to register themselves. So it will facilitate them to get the money in time.
Very nice, Jan sir. Jan sir, you are a FCA. So now we are talking about the platform of Association of the Financial Advisor. Whether as a financial advisor, you are also a financial advisor. How you feel that? What your role should be there to guide the small entrepreneurs or to SME sector or to other who is need of the supply chains? Whether you feel that you can be beneficial to these entrepreneurs.
Yeah, definitely that an advisor can play a very crucial role, because now what happened that since technology it's happening, technology disruptions are there, and lots of improvements are also happening on the technological front, as well as our customers are really not educated to understand these technological things, so that an advisor can definitely register themselves that all their customers to these technological platforms and get them money whenever they require.
Very nicely. Malla, you feel that the advisor, financial advisor, can play a very important role to guide this SME sector, how they can tie up with the big ends and they can get the benefit of the supply because it is also a very, you can say, cheaper rate also. That is also important issue. So I will come back to Mr. Jain later on to you. Now I'm coming to
Thank you.
Samresh. His head credit business operations and process digitalization supply chain finance product. Mr. Samresh, having 15-year experience of credit risk management, credit rating, portfolio monitoring, managing anchor program in MSME space. He did BTech in computer science and engineering from West Bengal Technical University, and after did his PGDBM from Delhi, started career 2007 as a sales manager of IFL, and after that worked in a different organization in the regional level SME sector underwriting domains from 2014, working in CF product. I think this is the most important aspect, where he also worked in a CF product in designing credit policy process, automations, CF business progress, restructuring, anchor programs. I think he's the right person to talk about the innovations. Innovation, how's our innovation impacting the supply chain? Because innovation is play a very important role. Whether you talk in any sector, whether it's technology improvement or a financial innovation, everything is playing a very important role, sir. So how you feel that this innovation can play important role for the economic development of the country and to achieve the 5 trillion economy as envisaged our honorable prime ministers. And what is you feel that innovation impact on supply chain? I hand over to Mr. Samresh. Samresh ji.
Yeah. Hi, good afternoon to all, and thanks, Mr. Gupta, for giving a brief, short introduction of myself and all the panelists at the beginning. So I just want to just take 2 minutes. Like supply chain is not a new product for the financial market. This is a traditional, you can say it is coming from ages. It is not today's product, and it innovated every years and every decade. Every civilization used to have this kind of product. If you see history, everybody used to do trades, and because when everybody do trades, they need financing. So the financing one is the trade finance. The supply chain comes from there. So now in today's world, we innovate this product in different ways based on the different requirement of the different participants. Also, different participants means it can be vendor, it can be anchor, it can be dealer, it can be different fintech players. They come and it innovates every day and every moment it is getting innovated. So now, after 2007-8 crisis, because regulator become very stringent, they're bringing new rules every day. So it become very difficult for SMEs to get fund from for their business. So now they used to get funds in different ways, from working capital loan, business loan, some local financial loan from local finance at a higher rate. They used to take funding and they used to do business. Because SME know they have to do business. If they have business, they will do it at whatever way. So now, after this pandemic, like in 2020, when this pandemic hits to like worldwide, so this has changed drastically these sectors. For these MSME sectors, the scope of this financing for supply chain finance and digitization of supply chain finance. So the way it has been digitized, it has been innovated in last 2 years. If this pandemic was not there, it would have been taken 10 years. So it has taken space growth like this. So now, so I just tell you 2-3 points, like few points, like what are the different challenges faced in supply chain finance, in traditional supply chain finance, which used to do by different banks or different financial institutions previously. So one is there was a very heavy paperless process, and all this process was very human intensive process, and they were not able to reach all parts of the country. It was very difficult because they used to do where they have the presence of the branches, or they can reach easily from their nearest branches. So there was no presence, all India presence, or all parts of the country was not reachability for the bankers. So there was very stringent regulation on financial compliance part. Like, so you have to maintain a lot of financial compliances for the lenders. And so, and this traditional process was not very agile to change requirement. And there was a very time consuming process to take disbursements of funds from these banks for the SME customers. So now to address this pinpoint, like to these challenges. So this innovation takes a lot of role, and this digitization take the front wheels to address these challenges. Like I'll say, so as of today, as the other speaker, Mr. Abdullah told, that digitization helps these all these lenders to get their data in single click in a single place. Otherwise, in traditional process, they used to have this data in paperless process in different files. They have to get it is not very easy for this retrieve this data. So innovation and digitization. So this is the main way forward for the supply chain finance. Because if you do innovation means how you structure the product. So I'll just give an example. So there might be, so everybody talked about the Tata and Reliance, because so this Tata, Reliance, this supply chain is done by the big banks. Okay, but for SMEs, for suppose there is a 500 crore SME corporate who is supplying to Tata, he need working capital for his suppliers. Okay, so to fund him, we need to do innovation, because sometimes banks are not able to do all of his suppliers. Maybe banks are also there. I'm not denying that banks are not there. So financial institutions come to this place and they said, "Okay, sir, my cost of fund is bit high." I think this is an example. This is not for all other players. My cost of fund is high. So this corporate says, "What is your cost?" He says, "Yeah, my cost of fund 12%." So he told, "Yeah, my vendors are not agree for paying 12%." Okay. So I can ask him, say, "Sir, what is the rate you are expecting?" He says, "I expecting rate at 9% or 10%." So we can have a win-win situation for all the parties. So we can have a structuring of the product that I can tell that corporate, "Okay, I'll come to this picture. Do one thing. You need funding. Yes, I need funding. So do one thing. I do it 12%. You bear the cost 2%, and I'll charge 10% from your customer." So for effectively, for you, cost of fund is 2%, for your customer it is 10%, for me it is 12%. Now it is fulfill everybody's needs. It is not banks can give a 8%, everybody cannot give 8. Because NBFC, very few NBFCs in India can fund to that 8%. It is not every NBFC can fund, or any or financial institution, fintech can do funding at 8%. It is not possible. This is practical thing. We have to talk about practical actually. So this is called innovation. You are bringing, like you are dividing your cost of funding by 12% in two parties. One party is giving to bearing 2%, one party is bearing 10%. You are getting 12%. So all parties are happy. Everybody is getting money on time through digitization. Because previously used to, for discounting on invoice, everybody used to check invoice, confirm from the corporate that you have raised this invoice or not. You confirm it over email or through physical. Somebody will visit, some RCU person will go check that you have raised these invoices. So now through innovation and digitization, we are bringing all this data through different what is called integration of systems or technology. So and corporate system is integrated with lender system, and supplier is using that platform to raise the request. Our corporate is confirming through digitally, and payment is also disbursed through digitally without any manual intervention, directly integrated through your bank, and bank is making the payment to respective customer account. So there is very minimum chances of human error. So previously, when in my experience, we have experienced that when we used to make the payment through manual process, somebody used to make the payment in different wrong account. So this is a very risk which was earlier. Nowadays, everybody using technology, and this all human risk, which we call this is called operational risk. So all this operational risk is getting minimized, or it is like avoided through this technology. So this kind of innovation in supply chain product, not only players like banks, or not only players like fintech players, so everybody is bringing new innovation in market, and every day everybody bringing new product. When you went to market, you heard that that company is doing this business like this. I'll not giving any example because this is the trade secret. Okay, so and we also think because today I'll just give you today I was having a meeting with my team. So one of my like recently joined management trainee, he told, "Sir, why you are using this process? Why you cannot do this process? This will like save lot of operational manpower of any corporate. So we can, if I'm doing today 100 crore business, with this process we can do 200 crore business." So this agileness and automation, everything can be done through digitization and innovation only.
Very nice. Very nicely, Sumesh, you have told. I think you are the helm of share to form a credit policies of the for the supply chain, which I've seen from your biodata.
Yes,
That you
yes.
have developed so many products. When we are talking about the platform discounting, we are also talking about the dynamic discounting. And we are also talking about the blockchain. How you feel that the blockchain, how it is helpful to the supply chain, sir?
See, blockchain, it will help in a great way in supply chain. I think and I believe that, firmly believe that, because as Mr. Jain and Mr. Abdul also told, so like, so due to in India invoicing process become digitization. Like, so like most of the more than 20 crore turnover companies, so they raise digital invoice, and all the invoice should have the EOA bill. Okay, so now in blockchain, so what happened? So no, company, what they can do, they can, suppose they have tied about three lenders. Okay, so one invoice he gave to one lender, and he took the financing. Now he need of additional working capital funding. What he can do, he can go to the second lender and he can give the same invoice. He can say you fund this to me as well. It can be done. Practically, it can be done in current scenario in present market. Now, if it comes to blockchain, so if this invoice it comes to in a blockchain, and if it is funded by one lender, that cannot be funded by any other lender,
Right.
because
Right.
you can easily get to know this has been funded,
Yes.
because blockchain is an open kind of ledger where it is connected to everybody, so
You can
everybody can get
change
to
that.
know this information.
You cannot change also that.
Yes, yes. So the dual funding or double funding of invoices, it is not possible there. So that can be completely avoided when it will come in the blockchain. Definitely, it will come in one day. The way it is getting innovated, and I think few fintech player is giving these services. When these services will connected with all the players, and it come into everybody will come to the blockchain, and this will happen in coming days. Even recently, that one new thing which is coming, this account aggregator thing. When this thing will implemented in India, it will be, as UPI has changed the how digital payment can be done in India. World is now thinking that how India has achieved this thing in a very short span of time. The Western country could not achieve the same thing last 35 years, and India achieved in last 10 years.
All right.
So same thing will happen in digital lending and digital lending space, when this account aggregator will be vastly accepted by all the lenders, and it will change this entire scenario of India.
Mr. Samesh, what you're talking about, there is a scheme of the trade where you can go to the exchange, discount your bills.
Yes,
And that is a without recourse also.
yes.
And why the people should go for a platform for discounting? Because that is a recourse left with the parties also, with the banker also. So why they should not be use a trade platform?
See, in trades platform, say all the platform have some kind of limitation. Some benefits is there, some limitation is also there.
Okay.
So in trades platform, because if you want to discount your trade platform in invoices, that buyers need to be registered there, first of all. If buyers is not registered, you cannot discount that invoice.
Okay.
Okay. So but in different platform like cash flows, they can help different buyers to structure the product, because there you can do only vanilla discounting thing. You cannot structure there. Okay. So if you discount that only I'll do for 30 days, then it will happen for only 30 days. Now, as per business requirement, because until the why we are here to solve the problem, not to just a vanilla product. I am not here to offer it. I just need your, what is your problem? Your business required for 35 days. Okay, I'll give 35 days. So
Okay.
that can be done through different platform or different lender directly. Where trades will have one product they'll design, they'll give it in the platform, and you have to go buy that product design platform only. But if you want structuring of the product or different requirement, so that can be done by the different platform or lenders.
Okay. Yeah, I'm just asking you this designing because you are designing the credit policy for the supply chain. That's why I ask this question. This is a very pertaining question. When somebody can have a without record, they can discount and get the money because it is also a fixed period and that will drawn to a very reputed person. So that's why I'm asking you whether you have anything in your mind to have the credit policy process, which inside having you are talking about the platform discounting, you're talking about the dynamic discounting, or we are talking about this blockchain. Beside that, something is available in the system. What you are feeling that?
So as of now, because so far without recourse product, it is available into market because people can get without recourse product with different corporate tie-ups. Okay, so nothing other than this. It is I don't recall anything as of now.
Okay.
But without recourse, you can also have supply chain product because
Right.
so sometimes some dealer finance product, not the vendor finance product. So dealer finance product sometimes it is without recourse to anchor also.
Okay.
Okay. That it depends on different industries, what kind of product you are dealing.
Well,
So
very
if
nicely, Sumesh.
yes,
Very nicely, you have covered everything. I will come back to you.
yeah,
Now I'm
thank you.
coming to Mr. Nair. He is CEO of Mool. Mr. Nair is co-founder and CEO of the Mool, an all-in-one fintech platform for banking, investment, and insurance need of its users. An MBA graduate from Oxford University and Bachelor of in Ethics, Politics, Economics. He has gained 5 years of work experience in the US and India with the name like Delberg, Facebook. He also worked as advisor to the Union Government Minister. Before his entrepreneurship stint with Mool, he managed to work portfolio in consulting, product management, public policy, community development, partnerships spread over almost 10 countries. And he's a expert in the fields of technology transformations. What I am asking from you, sir, what do you feel that technology be transforming supply chains? How it will be helpful? Because the technology aspect in supply chain is the most important things. Even with a 24-hour, you can work, you can discount at any time, you can be accepted, and money can be in your account. That means technology transformations. What is your thought in that in supply chain technology transformations? So I hand over to Mr. Nair.
Uh, Thank you, sir, for the generous introduction, and to everybody else who's joined this panel for your interest. Um, I am neither from a supply chain or sort of business financing background,
That,
nor have I sort of worked with a financier, right? My experience in this domain has really come from trying to build a product at the very early stage, a digital product, and actually talking to business owners and other people about the financing issues that they face, right? And with that, design good UI UX, design good services that can help them connect better to other financiers. So at Mool, what we do is we've built a retail neobank that serves the emerging middle class with options for savings, investment, insurance, and credit with a really easy multilingual UX. And it was in the context of expanding this platform to businesses and doing one pilot with the single NBFC, that a lot of my, the few of my findings, are kind of based on. So to answer your question, sir, I think digitalization has many advantages. A lot of these have been discussed already, but perhaps it'll be helpful to summarize them as what the benefits are to say an anchor in the supply chain to a smaller, tier one, two, three business in that supply chain, and the benefit to financiers, of course, right? So we talked a bit about how a great company like Maruti can create financing within its supply chain on the back of its brand, right, and capitalization. That is harder to do for large businesses that are not as well known, right? So there are lots of businesses that have great turnover, are often sort of family promoted businesses or other manufacturing trading concerns that have grown significantly, but whose financing ability is still based on the back of relationships, with the branches of local branches of banks in their neighborhood, right? So even for the anchor, technology can be a useful way to create a better credit rating and to be able to get the sort of underwriting and rates that they deserve, right? You could have a way of credit reporting for businesses, right, in terms of what their in where they can report the performance of their payables, right, so that uh, more aspects of that business are considered when they're considered evaluated as an anchor, and be able to sort of draw financing in through the rest of uh, their supply chain, and not just based on the few metrics of their capitalization or sort of brand and relationship value, right? Second, there is the opportunity to expand inclusion of the 60 million plus MSMEs in the country, right? The smaller the business, chances are in many cases that they have a larger volume of small ticket transactions, right? Um, on a digital platform, you can actually study the trends of those transactions, the nature of those transactions, and be able to create products with more flexibility around the terms of the product as well as the tenure, right? So that eventually what you're dealing with is one line of credit with a single cost of capital for every business, right? It shouldn't matter at the end of the day whether the financing is for a particular order, or whether it's for drawing money into your business corpus as a whole, right? um, and for financiers, I think digitalization has huge opportunities. It allows them to, on the one hand, sort of find partners who are, more like technology companies who can partner with them to grow their book, working as distributors, collaborating on a shared understanding of a more holistic credit policy that considers more variables, have better and more accurate underwriting as a result. You can have simpler onboarding, not just for the end client or consumer or business that's borrowing, but even for the operations of the lender. You can have streamlined repayment and liens. I think Mr. Nandi sort of already spoke about account aggregator, and we can get talk a bit more about that in detail. And for as a result of these efforts, potentially lower the cost of funds for NBFC themselves if they're able to make a defensible case for why there is sort of lower risk in their book. So perhaps I can just stop there and take more questions.
Oh, very nice, very nice. Mr. Nair, just I want to know from you, because you are 100 million people of India, you inspired. How you can inspire our members here so that they can be get the benefit from that? Because I've seen your biodata where you're mentioning that you inspired about 100 million people of India who are not only hardworking but also aspirations. So that you can advise us how you inspire the people, how you can inspire our members who are listening to you. More than 700 people are listening to you. So what inspiration you can give them?
Well, I don't think anybody on this call needs to be inspired more than they already are, right?
Just I'm asking for that. With
And
transformation, other things. So you can be best guide for that. If you can. If
I
you
think
can.
everybody, absolutely, everybody on this call is working towards a common problem, trying to find
Right, right.
impressive new solutions. Um, I think the only thing that I can share is that, and this is true perhaps for finance generally, right? Is that it's such a industrialized business, right? That oftentimes even the words that we use, the names that we give to products, the terms and ways in which we write our documents, right? Um, a lot of this is not user friendly, and if we're talking about making it inclusive and getting more people access to capital that they need and deserve at competitive rates, then that is one area I think that we can all focus on a lot more, about how to make things more user friendly, for borrowers, for lenders, for distributors in the middle, and really use technology as an instrument rather than you know the outcome itself.
Very nice, very nice. So Nasa, I will come back to you again. So I am now requesting Mr. Ankur Bagaria, you founder of and CEO of Cash Flow. Mr. Ankur is the founder and CEO of Cashflow, Indian leading digital supply chain finance platform, serving over 100 leading corporates and 1 lakh plus SME. Ankur came from 15 years of experience in financial services and technology. He was previously a management consultant with BCG and also investment banker with JP Morgan. Before that, Ankur has completed his BE from Mumbai University and MBA from ISB. Ankur sir, that's I want to know because you have such a big profile with you, serving more than hundreds leading corporates. What do you feel that? What are the new opportunity for the supply chain? Because supply chain, what I feel, there's no dearth of the market. When I've seen some figures where we say it is about 60,000 crore rupees market is available, even more, much more than that. And how you feel that new opportunity for supply chain, Mr. Ankur, can be helpful to our entrepreneurs? I will hand over to Mr. Ankur. Ankur sir.
Thank you, Mr. Gupta, for the opportunity to address this very esteemed forum. I think it's a very pertinent question as well. I think the overall promise of supply chain finance to plug the SME credit gap in India is I think been around for a very long time, as some of my other panelists mentioned. I think the challenge has always been how to operationalize it and how to make it more broad-based and widespread beyond just the select few large corporates and their large vendors. Because historically, supply chain finance has been the realm of, like you said, so India's largest corporates and their top 200 vendors, right, in every industry. But the question always remains: what happens to that small logistics vendor? What happens to that small packaging vendor who might be serving a well-rated corporate but still does not have access to credit? And then the second point that you very rightly brought out was what happens to that sub-vendor? If there is a sub-vendor who's supplying to a tier 1 vendor who then supplies to a Maruti, who takes care of that tier 2 vendor, right?
Yes.
I think over the last 3 to 5 years, supply chain finance has undergone a tremendous amount of evolution because of technology, because of adoption of technology among corporates. A lot of push from the government, of course, to digitize invoices, and GST, of course, has really helped. And trades, of course, has been present as well. I think the way we are seeing the market evolve now, there are broadly, I would say 3 or 4 key trends that are beginning to take shape in supply chain finance. I think the first and foremost is, when you look at supply chains which are cash rich, where the corporates are cash rich, what happens is they are not interested in doing any kind of financing through banks. They say that, we, like an ITC, if you go to, they'll say we don't need the money, right? We don't need, if our vendors need the money, we will give it to them. But it never really happens in reality. So when we had done an estimate, when we looked at data, we realized that there is over 10 lakh crores of capital that is sitting on corporate balance sheets, which is earning 5% in FDs or liquid funds, right? Whereas their own suppliers, a lot of the small suppliers, which we call long tail suppliers, these SMEs are borrowing at 18 to 24% or maybe even higher in the market, through informal terms. So the first opportunity is to just figure out a way to unlock and mobilize corporate treasury money and funnel it into our supply chains. Because, when you look at the overall banking sector's exposure to MSME credit, that number is in the range of 20 to 25 lakh crores. Now, you have another 10 lakh crores of capital that is actually sitting on corporate balance sheets, which if, using technology, if you can unlock, then that is a significant amount of capital that can be made, put to good use, where these businesses which otherwise would not get access to bank funding can now get access to cheaper cost of funding. So that's one of the things that we've been working with a lot of cash-rich corporates and enabling way to mobilize their capital towards these SME suppliers. In some people call it dynamic discounting, and there are various terminologies, but the fundamental idea is very simple. It is to say, can you create a win-win situation between the buyer and the supplier? Because only then can you create a sustainable ecosystem where both parties have enough incentive to participate for financing, for supply chain financing. So I think that's the first opportunity. I think the second opportunity is actually extending supply chain finance to go beyond invoice discounting. See, what happens is when you look at a trade, especially in manufacturing, there is a cycle from the time a purchase order is issued by the buyer, right? And then it is once the purchase order is issued, the supplier will go buy raw material. Then he will, supply it to the buyer. He will raise the invoice. Then there is a cycle of buyer approving that invoice, and then finally paying the invoice after, let's say, 60 days. Now, in this entire cycle, all the effort so far has been focused on how can you finance that invoice after the buyer approves it, right? But in India, the challenge, and this is practical on-ground realities, I can tell you, typically in every supply chain, at least, and it ranges from 30% to as much as 50 to 60% of all payments are overdue. All payments are delayed, right? So, and the reason for that is invoice approval itself takes 30 to 45 days. So when we work with some of our clients, we've realized that, let's say of the total discounting opportunity across 100 suppliers, you can only address the needs of 20 suppliers because the remaining 80, the time it took to approve the invoices has already crossed the due date. Right. So, classic example of logistics, transporters, these are the people who need the money the most, right? But by the time their invoices gets approved, their due date has already passed. So invoice discounting in theory is a great concept, but it does not fulfill the complete needs of SMEs when it comes to credit. So what we are doing with a lot of our clients is enabling financing even before invoice approval, which is to say, can you do it at pre-shipment stage, or can you do it after shipment but pre-acceptance, right? So that is actually what will unlock huge value for India's supply chains, because you could have a situation where there is a supplier to a Maruti who has received a purchase order, but his credit period after invoice approval is only 10 days. So you cannot do invoice discounting there, but you can certainly offer him money at the PO stage, right? And those are innovations that I think will really expand the size of the supply chain financing market and go beyond invoice discounting. And we are already seeing that happen, with a lot of our clients. A lot of our we work with, some of the large, corporates like a Crompton or an ITC, or some of the like a Lupin. And a lot of these corporates are thinking about beyond invoice discounting. How do we enable our tier one suppliers to get funding at the PO stage itself? So I think that's a second opportunity. The third one is, the deep tier discounting, as we call it, which is, to the point that you had raised earlier. How do you get the tier two supplier, which is the sub vendor? How do you arrange for financing to that sub vendor, right? So again, here technology can play a very powerful role, because ideally what a technology platform can do is it can bring all the parties on the same platform. The main anchor corporate is a tier one supplier as well as his tier two supplier, all through a single platform, so that the moment a purchase order is raised from the corporate, it becomes visible to the tier one. The tier one then places a purchase order to the tier two, that also becomes visible on the same platform. And then the payment behavior right from the corporate to the tier one to the tier two can be tracked on the platform on an ongoing basis. So what that does is, it allows you to assess credit risk in a very different way. Normally, you would go to the tier 2 supplier and assess his own credit risk. But now you can predict what his future cash flow will look like, because you also have the anchor corporates payments happening on the same platform, right? And that is the, I would say, the next sort of step jump when it comes to supply chain financing, which we've done some pilots in a couple of industries recently, where we've actually enabled money flow from corporate to tier 1 and tier 1 to tier 2 as well in the same transaction. And that I feel can be a huge value unlock, because the real credit gap actually is sitting at that sub vendor level, like you were rightly asking. So I would say, in summary, these are the three areas where opportunities exist. And I think it's up to the ecosystem to develop these further and unlock more value from this promise of supply chain finance.
Very nice, Ankur. I think you are a very practical person, and you are clarify all my doubts, because the sub vendor is bit a problem. Still, one doubt is there. When you're talking about the sub vendor should also come on the same platform, whether who is the main vendor will allow that person to come in that same platform, because he will never try that he should be on the same platform, and he should be telling that this being manufactured by somebody else. What are you feeling for that?
That's a great question. And the answer again lies in creating incentive at every level. So ideally, if you need to create incentive for the main anchor corporate, you need to create incentive for the tier 1 vendor,
Sir.
and then the tier 2 vendor, right? And the way we think about it is very simple. If you can tell the tier 1 vendor that, look, by bringing your tier 2 supplier on this platform, you can get an additional 30 days to pay your invoice, right? While your tier 2 vendor can get money on day 1.
Right.
Then you are creating incentive for the tier 1 vendor also to attract his suppliers on the same platform, right? So it's about, creating some incentive for the tier 1 vendor to participate. Otherwise, you are absolutely right. Without incentive, nobody does anything in this country.
For your main point, what you're talking about, sir, that is really a innovation. So what I have not read anywhere, even as a banker, I was not feeling like that. What are you talking about a pre-shipment without raising any invoice? Even he's not accepting the invoice, still you're discounting it. As a practical, Mr. Ankur, any bank is accepting that invoice. Without acceptance, they are discounting the bills, because it can be only a book debt facility to the bank. It cannot be supply side. And what you're feeling for that, sir?
So that's a great question. I think this is where technology actually is playing a huge role. See, what happens is, today, if a supplier goes to a bank and says, I have received a purchase order from even a Maruti, please provide me a credit line against this, or a PO financing facility against this. Every bank will be skeptical, unless the supplier itself is a very well rated larger company. But here, a technology platform plays a very big role, because, for instance, wherever we do purchase order financing, we are actually embedding ourselves in the payment flows of that corporate as well. So we get to understand what his track record with that supplier has been for the last 12 months, 24 months, and not just at a invoice level, but actually we track the payment behavior as well. For instance, if it was a 45-day credit period, did the corporate release the payment in 45 days, or did he delay it after by 30 days, 40 days, 50 days? So there is a lot of analytics that goes into assessing whether this vendor, first of all, whether this vendor itself is credit worthy or not. How do you control his end use of funds? How do you make sure that the money that you give to that tier 1 vendor against the purchase order will actually be used for his raw material purchase, right? So again, technology plays a role to ensure that the money goes only for raw material purchase and no other end use. He cannot go and buy property from that money, for instance. So you mitigate risk that way. Secondly, once you start looking at payment behavior from the corporate on an ongoing basis, you can predict, what's the extent of risk that exists, as far as the fulfillment of that order is concerned, and the final payment is concerned. So without technology, this problem will not get solved. The pre-shipment finance on its own, a lender will never have enough visibility in that supply chain to be able to take those decisions. But the moment you have a technology platform that creates visibility between corporate to their tier 1 vendor to the tier 2 vendor, automatically there is a lot more data that a lender can use. And here, it's very important for the platform to participate in the risk as well, because I can go to a lender and say, you should trust my analytics, please lend directly to the borrower. But no lender will do that. On the other hand, if I go to the lender and say I will participate in the risk, I will co-lend with you up to 20%, or I will provide some kind of loss guarantee, then the lenders have more confidence, right? So I think these are things that are needed in order to make this a reality.
Very nice, very nice. They actually, Ankur, what I'm tempted to ask you one question, because we are talking about a pre-shipment or without acceptance, the discounting. Because you are dealing with the more than 100 leading entrepreneurs or corporates, whether such things are happening.
So pre-shipment is still a relatively newer concept. Like I was mentioning, invoice discounting is where most of the focus has been in the recent years. But we are increasingly seeing a lot of lender interest as far as pre-shipment is concerned. For instance, HDFC, DBS, a lot of these lenders are very keen on doing pre-shipment as well. But they are banking on technology platforms to first, help mitigate the risk. Right. So we've done some recent pilots where we've seen some success, and the goal is that over the coming couple of years, you'll see a lot more of pre-shipment financing coming in.
Very nice. I will come back to Ankur later on. So now coming to Shri Puneet Sehgal, he is Vice President, Axis Bank. In mechanical engineering with MBA and diploma in international trade. He has been part of the Axis Bank growth journey for last 22 years. During these years, he headed the branches business banking, transaction banking, agent date, had commercial banking, supply chain, finance being an integral part of the franchise. Sir, Puneet Sehgal, sir. Just I want to know your experience of the bank dealing with the supply chains. I think you have listened to all our other speakers. I have not disturbed you. I tried that you should also interact on that aspect. What I am asking you, you have listened to Mr. Ankur and you listened to other people also. So, what is your view, sir? Pre-shipment, post-shipment, what you're talking about without acceptance of the bills and blockchains, something like that. What is your experience in the dealing with the supply chains? So I hand over to Mr. Sagar. Puneet
Yeah,
Sagar.
thank you, Gupta ji, and once again a good evening to all the co-panelists. I was hearing, and I was just imagining how things have moved. By chance, my father also is an ex SBI, so from that time to this time, how things have moved. And looking at him, I was never, I never intended to enter into a bank, but it is so interesting that today you can do a lot of things. And thanks to the initiative of the government as well, I would like to highlight here that how the government has forced us to being in digital, and digital is the thing that would help both the sides, the lender, the borrower. And I think the benefit which the digital gives to the borrower is, you can't imagine, as Ankur was saying, that times have come that the traditional things which you were asking him, that without acceptance, what is the credit risk, pre-shipment. Yes, I think that's the most important thing. As an entrepreneur, I have the skills, I have the confidence, I have the capabilities to deliver, but all these banking terminologies, somewhere comes in his mind. Day before yesterday, I was speaking to one of my borrower who received a 24 crore order. His annual turnover is just 55 crores. And he came to me, "Ki, boss, I can very well execute it, but I need funds." So I think the MSME is a very, very important critical growth and factor for the country as well. And digital, maybe GST, maybe a lot of platforms which help us giving a lot of information about the borrowers, helps in decision in making faster. I'll just try to correlate it. As a bank today, Invoice Smart, of course, way back in 2017, huge numbers are happening there as well on other platforms as well. I was just trying and imagining that some kind of, for example, in an app of Axis Bank as a retail customer, I am a pre-approved personal loan. I click it and within 10 flat seconds, the money is in my account. If that can come down to the SME borrowers, because we have a lot of data available. I know the borrower, I know the uh, uh, behavior of the borrower, data analytics, blockchain. I think all these things can very well help. And I would like, again, when you were asking me about the what is my experience, I think dealer funding is still pretty okay. I think the vendor piece still needs to be worked upon much, much more. And that's where the entire thing and innovation would help not only the borrower, but a lot of platforms like Ankur is doing, like Samaresh and Mazin also told, and definitely advisors like Mr. Jain, because I have seen a lot of typical entrepreneurs. They're very good at their technology, they're very good on their ideas, but on the financing piece, they definitely need a lot of advice. And I think webinars like this and sessions like yours would definitely help them. Yeah, that's from my side.
Hey, Mr. Sagal, what I want from you, because being a experience in the banking sector of more than 22 years, and you're also part of the supply chain. So Ankur has raised one issue for a pre-shipment. Is without acceptance of the invoice. So what as a your personal views for that? I'm not asking as a banker views.
No, so yeah, definitely. But I would be giving my personal
Personal
view. I'm
views
not
for
allowed to give the views of my bank.
I'm not.
But
I
uh,
know bank. I know what you were going to tell. Because what is your personal views for that?
I think if you're able to mitigate that risk, there's nothing wrong in that. And risk mitigants on pre-shipment and monitoring the end use, I think these two factors would play a very important role.
Okay.
If the end use is defined, if I have to purchase a raw material, and if I have to, for example, I have to go to Reliance and purchase raw material on LLC and I'm funding that, I think there's no issue at all.
Okay. You feel that it can be allowed for that.
Yeah, it can
Right.
be allowed, but there has to be risk mitigants there. And I think only technology can play a much, much important role rather than, human interventions there.
Okay. Then the question is some vendors. Because vendor, suppose to a data or some vendor is there, definitely they will honor the bill, they will supply it. If there is some vendor, how the bank will view for that? If there is some vendors are there of the major supplier of data, how you will view as a banker?
So I think, as I think Abhinav was saying, you have a lot of players and every player has their own segment. So everybody has their specific focus on specific this thing. As on today, yes, and rightly I was listening to one example. The most important player in the entire supply chain is the logistics, and he's the person who is you feel that he's not even asked about whether you really need financing. So that can be another niche area. I think some definitely other players can definitely chip in for these kinds. And as Ankur was saying that bringing them on the same platform, how do you incentivize? I think that mathematics needs to work upon. But yes, that's a niche market which can definitely be explored. And again, technology can help in the sub vendors of Taiwan vendors.
Mr. Sahi, what are your views about the future of this digitalization of supply chain financing in banking perspective?
So I started off with that. I think without digital banking will not be going ahead. So if I can use a retail again parallel to this, I don't think so. Any of the panelists would have written a check for even 2 years now. It's all digital.
Right.
So no, I myself don't remember when I last wrote a check. So some things are things of the past. So in the same way, I think things would develop, and digital is the key. The only thing is, I still have a lot of borrowers today who would say that, boss, I'm still not confident, whether I initiate the payment, and if I do something wrong, what happens? So that confidence. But if you ask me, the numbers which I was looking at, even today with my bank, around 70% of the borrowers are on digital. And I think that's a good ratio as on today, because as an organization is spread across the country, so people might have inhibitions, but that's the way. That's the way. If you look at, even social media, and that's the power of mobile, which you have. I was just listening to the Prime
Now
Minister
mobile
yesterday.
is a bank. Mobile is a banking. Mobile is you can do anything without the mobile also.
Yes,
I think that is
anything
okay.
means
There is one
anything.
question,
Yeah,
Mr. Sagal. I agree with you. Ravi Lalwani is asking, so what you can share the cycle process for the dealer finance? Because a dealer require a
the,
finance. What should be a process? What should be
so
cycle? You
yeah,
can
yeah,
throw some light?
sure, sure. So dealer finance, generally the institutions have their own programs. So again, it depends upon the anchor. So there's a program which every institution works out with the anchor, and based on the requirement, you set a certain line of credit based on the anchor and this thing, and it works in a very simple way, because apart from whatever limits the line which is there on the anchor, as a banker, what we do is simply quickly do the due diligence on the credit worthiness, and set up according to that. It's quite faster. It's to say on certain amounts is unsecured. So I think that's very faster. And if Mr. Lalwani can check with his anchor what are the tie-ups the anchor has with which banks, I think dealer funding is too simple and too faster compared to our traditional working capital finance.
Very nice. No, for a dealer, I think there is no problem at all. If your dealers, even your to whom you are, who is supplied to you, he is ready to give you, identifying you. I think
Right.
there is no problem at all. You can avail the dealer finance also from there. Only point is who is supplying the goods to you. They should
Hmm.
identify you. That is a major aspect for that.
Right.
So I'm just coming to Mr. Sumesh. Sumesh, there is one question from Aditya Chaudhary for you. He's telling how can we analyze the risk factor of SME with collateral loan? As we can see in our country, India, many of the financial institutions are providing loan without of any security. Have any views, sir, Mr. Sumesh? Well, he given your name only.
Yeah, that's fine. Thanks for the
He
question.
asking from you only, Mr.
Yeah.
Aditya Chaudhary.
So as Puneet sir told that the supply chain finance, dealer finance part, okay. So partly it is unsecured, okay.
Yes,
So dealer finance part, partly it is unsecured. The risk part, partly it is done through technology base,
yes,
partly it is done by the some underwriting. I will not say it is completely digital. Depends on different amount, how much amount you are funding. If there is a small ticket dealer financing loan, we can do it through digitally. We can mitigate the risk of the customers by checking different data points of the customers, like his previous repayment history, his previous track record with that suppliers, how he's making the payment with the supplier, what is the delay he has done with the supplier. All these track records can be all these analysis can be done through digitization or through systems can do it, all these things. And some manual checks, because when you are giving unsecured, you have to do some checking, because when as a lender we are giving money, we are not here to lose our money,
That's
we are
it.
here to safeguard our money.
Sure.
So we have to think in that way also. We have to see the risk on the transaction. Okay. So if the supplier for whom I am doing the dealer financing, if the supplier can confirm that yes, I have delivered this material, and buyers who accept the invoice that yes, I have received the invoice as per their our satisfaction as per my requirement. So in future, one risk we are avoiding, that there is no dispute on the transaction. So if you don't know, buyer cannot say, yeah, I have not received the material is not good. So all these things, quality is not okay, I don't accept this, I return this material. All these trade disputes can be avoided at the beginning through digitization. And I agree, there is some traditional finance banks, they do financing through without any collateral. They don't do any without any collateral. But for supply chain, you can take funding without collateral as well. Because if you are taking to dealer finance, it can be in market today. Lot of bank, lot of NBFCs is there who is doing funding without any collateral.
Very nice, very nice. I think it reply properly for that.
So that is the, so I just add, so that is the purpose of supply chain finance. Because
Yeah.
if you do collateral, take 10 days, 15 days time, so anyway it is there. It is there, working capital funding is there, CC limit, OD limit, all these things are there, working capital demand loan, these products are there with the bank.
So, Mr. Apna Somresh,
Yeah.
any advice to lastly, any advice to our listener from your side?
So my side, what I'll say that because when you are giving any supply chain product or designing any supply chain product for any corporate, you have to understand the transaction. You have to identify the what are the different risk point of those on those transactions, and how we can mitigate those transactions through digital process or maybe some manual process. So if you can do that, if you can think there is no fraud in the transaction, you have to minimize the fraud. If there is a fraud, then you will lose your money. If there is a genuine trade happened, in my experience, so the default is very low. If there is a genuine trade has happened, because nobody can deny that yes, I have taken this money for doing some business, some trade, I'll make the payment. Yeah, that delay might happen. So there might be some delay, 10 days, 15 days over and above the due date. So that things can happen in a normal business scenario, that we can have to understand this requirement from the all the participants, that what is actual their requirement, and accordingly you have to design the product, give the solution to the corporate.
Very nice. Mr. Nair sir, have any last word to our listener, Mr. Nair?
Well, just that I think one of the main advantages of supply chain financing for any business is the the lower terms that it can get relative to many other avenues of financing, and I think the more competitive we can make that through the use of technology and the associated data and process innovation that provides, the better I think our case will be.
Very nice. Mr. Naveen Kumar Jain.
Yeah.
Jain sir, anything advice from your side?
Yeah, my advice is to each and every SME, CFO, and entrepreneur that they should keep themselves aware about the lots of digitization platforms which are available, and get them registered with these guys so that they can get their money, get them approved in a real-time basis, and hassle-free loan with a collateral-free, because lots of easy processes are happening nowadays. So keep let them. My advice is to these guys to register with these guys.
Okay, thank you very much. I'm coming to Abdullah sir. Abdullah sir, have you any view for that? And last word to our listener?
No, so I'm assuming most of the attendees are themselves MSME owners and their CFOs, right?
Yes.
And accordingly, I think one thing that has happened is traditionally most of the MSMEs have not received funding, right? And I think that is changing. Let's say recently. I mean, when I say MSMEs have not received funding, at least the very smaller ones with turnover of 5 crore, 10 crore, 15 crore have not received. Those above 50, above 100 have received it, right?
Right,
I
right.
think so. There is a mentality ki, so what happens is it's a vicious circle. I don't get funding, and hence I don't prepare for funding also, right? I think that's changing gradually, right? Or rather, not gradually. I think that's changing very fast. And I think as MSME owners, you also need to be ready to be eligible for credit, right? Which means, let's say, having books of account, moving most of your payments and your collections to bank accounts, uh, raising e-invoices, e-way bills, etc. Right? So moving your business, creating a proof of your business digitally is extremely important, so that while banks and fintechs are coming to you to offer credit, you should also be ready to accept and be eligible for that credit. So I think maybe one step the lenders have taken. I think another step MSMEs also will have to take to be able to ready to avail those credit. And I'm sure once you get the right amount of credit, the growth rate of MSME in India will improve significantly.
Very nice, very nice, very nice, sir. So I'm coming to Sri Punish Sehgal. Sehgal, sir, your advice to our listener.
Yeah, I would agree more or less what Mazin is trying to say, that, one, we all have to embrace the change. We all have to be digitally going ahead, believe in the process. And I am pretty sure true entrepreneurs, true SMEs, there's no dearth of funding or financing available.
Very nice. Ankur, sir. Lastly, Ankur, sir.
Yeah, I don't think I have much else to add apart from what the panelists have said. I think I agree with with the view that MSMEs need to start thinking about digitalizing themselves and their businesses in a very meaningful way. I think obviously the government initiatives will help, but it's very critical that they think about their payables and receivables coming onto a digital platform, because that creates a history and that allows for more avenues for credit. And the only additional thing I would add is as MSMEs, it's important that you go talk to your customers, larger customers, and ask them what are they doing about vendor financing and supply chain financing, because oftentimes corporates don't pay attention to these areas, but when they hear enough demand coming in from their suppliers, I'm sure they'll also start, taking this more seriously. So it's a concerted effort that's needed from the lenders as well as the MSMEs to make supply chain finance more prevalent in this country.
Thank you very much, sir. At the end, I request all the participants to give their feedback, at least to us. And we also requesting that they should also become the member of the Association of the Financial Advisor, for which we are sharing our link to you. I am also on the behalf of the Research in India and the associations thankful to all my panelists who talk from their heart. I think that is a practical aspect we have touched the point, not a theoretical thing. So we are trying now to all our webinar, which we are conducting under the platform of the Association of the Financial Advisors should be practicals. And so that our listener, our members, bankers, our stakeholder can say they are got something differently, because all things are available on internet, so something are there. Like whatever the practical experience we are sharing with you, it will be unique. I think today webinar, although we have overstretched some time, again, I feel that this webinar is a practical webinar and will be useful to the our member, to the participants also. I'm thankful to Mr. Nair. I'm thankful to Naveen Kumar Jain, Abdullah sir, and Samresh, Puneet Sagal, and Ankur sir for their in-depth interaction with our participants. I'm also thankful to my back team headed by Rohan and his team, who made an excellent arrangement for that and who has prepared everything, which is helpful for us to holding this webinar in a proper way. And with this word, I feel that I'm only requesting my participant. I'm thankful to them also, who has registered about more than 700. Beside the YouTube, other thing, Facebook, they are doing it. So I'm thankful to if they send a real feedback, what they are feeling about this webinar, so that which will encourage us to hold another webinar. If any suggestion from your side to have some different webinar on the different subject, so we will definitely accept it and we will try to come up to your expectations. So for the research in India, we are a merchant banker. We are also arranger for the debts. We are conducting a technical economical viability study. We are giving a training to the banker and PSUs, and we are in solvency also. My fintech company is also available. So any service required for the draft project report or any things for the technical viability study, we are at your disposals. With this word, I close the session with my gratitude all the eminent speakers and the participants. Thank you very much, sir. Thank
Thank
you.
you. Thank you.
Thank you, Gupta ji.
Thank you,
Thanks.
sir. Thank you.
Yogita ji.
Thank you.
Thanks, everyone.
Thank you, Jafar.